Hi everyone, hope you're doing well. Karthik sir here. Today we are going to see the chapter 9 revision of CA Interlaw, that is accounts of companies. Now this chapter is a fairly easy chapter and this revision will not take much time because it is already segregated in parts. Mainly in this revision I'll be focusing into how you will be subdividing each section so that it is easy for you to recollect in the examination. So more than the detailing part, I'll be telling you, okay, how do you subdivide each section so that it is easy for you, because this chapter has many big sections and students fail to subdivide this chapter. So you have to ensure that the detailing is done by you, but the subdivision I'll be telling you. And when I say the subdivision, you can just pause and see whether you are able to recollect that point. That is the best way to revise this chapter, this particular one. Okay, let's go for it. Section number 128, that is books of accounts. In books of accounts, we had seen something called as BIMPER. Okay, branch books of accounts, inspection, maintenance, place, periodicity, electronic records, and finally you have the responsibility, who are responsible. So these are the subdivisions of this section. Okay. Now you have to go in depth in detail and see whether when I say branch, does it come to into your mind that books of accounts of the branch will be kept at the branch. From the branch to the head office, they'll be sending proper summarized returns periodically, or any other place as recommended by the board of directors. They can send the proper summarized returns. Then you have inspection. Inspection, if it is in India, so you understand the books of accounts which are there in India will be inspected by the board of directors only during business hours. And if it is, let's say, outside India, the books of accounts are coming from there, then we have to comply with Rule 4. Rule 4 says that if it is in relation to the books of accounts, then the proper summarized returns quarterly will be sent to India, correct? And that can be inspected by the directors. If the directors want more any other financial information, they can give a written request mentioning the period plus details to the company, and the company will respond within 15 days. So what I'm trying to say is this subdivision you should know. Okay, that is what I'm going to revise with you all. And the content part, the way I'm saying it, you should be able to see whether you are able to remember that or not. Because if I say the what you call the detailing, then there is no use because in your mind still the cluster will be there. So subdivision we'll be doing in this session. Okay, that is the revision of this chapter. So as I told you, 128 is BIMPER. Okay, let's go ahead. 129 is in relation to Falco Deco. So as you know very well, that is your financial statements. First is in relation to form in which it will be there. That is TAF 4 if you remember. Then after that, accounting standards will not be applicable for which companies. Bingo, you know very well. Then after that, we have the next area that is in relation to the laying at the AGM. Then after that, we have the consolidation part. Consolidation, remember, has those three exceptions, correct? So just remember those three exceptions. Then after that, we had the next area that is in relation to deviation, reason for deviation, financial effects of the deviation. And then finally, we had the contravention part. Okay, who are covered in contravention? Those who are covered in the responsibility part. If they are not given, then basically all the directors, and then the penalty flows. Okay, that is basically 129. Then you have 129A, that is in relation to periodic financial statement. Very simple part. Basically, they have said unlisted companies have to make a periodic financial statement, that is basically half yearly, quarterly financial statements, get them audited, or the limited review should be done, that is LR should be done, and then they have to file it with the ROC. That is what is covered here. Then you have 130, that is reopening. Now, reopening is basically, you understand, forceful reopening, that is to be done by 6SAP. So, if the SEBI, Income Tax Authority, CG, statutory regulatory body, authority person, if they can give an application to the tribunal if they are of the opinion that the accounts are prepared in a fraudulent manner or the affairs of the company are being mismanaged, the tribunal will give them opportunity to give their representation, and then after that tribunal will give their decision and request the company to, or order, I should say, order the company to reopen their books of accounts and recast the financial statements. This the tribunal can ask for the preceding 8 financial years, or if the CG investigation is still going on, then it can be more than preceding 8 financial years also. Correct. 131 is revision. Revision very simple. That is voluntary revision. If any of the director is of the opinion that the company did not comply with section number 129 in relation to financial statements or section number 134 in relation to board's report, they can make an application in such form and such manner as may be prescribed, and this application will be made to the tribunal. Tribunal will take the representation of CG and income tax authorities, and then tribunal will give their own. They'll pass the order and give it to the company. Company will file the copy of the order to the with the ROC. Then in that case, then we did this C. Remember this only once in a financial year along with detailed reasons in relation to section number 129 and 134 along with consequential alterations, correct? Finally, CG in the future can make rules in relation to corrections the company can make, functions the auditor has to do, and the steps the director should take. That is your section number 131. Then we have 132, that is Constitution of NFRA. Very, very simple. You can just go through that area. That talks about mainly the NFRA forming who will do. That is, remember, chairperson plus 15 part-time or full-time members. That part. Second part will be in relation to the duties of the NFRA. These are the only two aspects that you need to do carefully in relation to NFRA. Others you can just go through, no problem. Okay. Then after that we did section number 133. That is very, very simple. In today's times when NFRA is being set up, the ICI can give their data to the central government, and central government will not notify directly. Central government will first what do you call, take the recommendation of the NFRA on it. NFRA will give the recommendation, and only after that the CG will notify any matter. Okay, that is basically section 133. It is called consultation of NFRA. That is how we learn. But you will understand the main accounting standards matter is here only, because ICI will recommend the accounting standards to CG. CG will take the opinion of NFRA. NFRA will give the recommendation, and then CG will then notify it. Simple. Let's go to section number 134. That is your board's report. Now, board's report has a few parts that you should know. Okay. Now, how you should divide this is the board's report entirely. You should divide it in 4 parts. Okay. First is who will authenticate the financial statement. That is covered in 134. So you know our tune in that. That is CP if authorized, 2D if not authorized. In that one, MD, second CEO. After that, CFO. In the end, secretary. After that, no. Also Singh who will sign the board's report together with that. Now you know this very well. That is CP if authorized, 2D if not authorized. In that one, MD. So basically that part is covered. Then after that we have the next area, that is the contents of the board report. Now this extends to a long area which I have given you the markings in this, that okay, from here to here you have to simply read through it, because a question asking the students to write, okay, please write the contents of board report, will rarely be asked. So you can just go through it. Don't waste your time too much on this. The reason being is we have lack of time. So you have to plan smartly and study properly. Okay. Last is we have, sir, what is the director's responsibility statement contain? So that is basically your sprints, if you remember. That is mainly in relation to accounting standards, accounting policy, accounting records, annual accounts, internal control, and systems. Okay, that is basically sprints. Okay, and this I've given you the content for this, and we have written it in the book also, so you can simply go through it. Okay. After that, we did section number 135, that is CSR. Now, CSR, the parts. Okay, remember today's revision session mainly is for the subdivision, because CSR, if I sit here and say the entire CSR, no use for you. So what you should do is the notes that I have given you, you have to see whether when I say the sub part, whether you are able to say the sub part or not. If that is done, then your real studies is done. Okay, let's go for it. First is CSR will be applicable to which companies. Then CSR committee will be containing which directors. Okay. After that, we saw, sir, the CSR committee's responsibility, then the board's responsibility, then the annual action plan of the CSR committee. Now the entire point in relation to that amount. So this is basically from that 2% of the average net profit of the last 3 years directly till that penalty part. Penalty means if you don't transfer it on time, then company will have to pay the unspent amount on CSR into 2. And whatever answer comes, so you have to then compare it with the amount and then see whichever is lower, and then you have to see the second part, that is, or whatever amount comes, you have to see that amount or 1 crore whichever is lower for company, and unspent amount on CSR divided by 10, whatever amount comes, you have to compare that with 2 lakhs and see for the officer in default, correct? This covers the next part, that is the amount part. So the amount part you should be able to say properly. Okay. After that, we did the next part, that is in relation to, sir, rule 2, that is to do not to do, that is lower NOPS. Okay, that is the next area. Then after that, we did the, sir, if can, does the company have to itself do the CSR work, or can it delegate it to some other organization? So we did our RI 8, 10 organizations, correct? RI 8 and then 10. Okay, 10, as I told you, is that amendment which came in, that is section number 10, clause 23C. Okay, so now this. These organizations which are there for which are given in the CSR rules, they can do this work on behalf of the company, and they have to get the registration done. Registration has to be verified by C3. All this is covered here. Then we did the impact assessment part. Impact assessment is very, very important. Be very, very attentive in that. Okay, so you should know that part. Then after that, we did, sir, that capital asset part. If the company is owning the capital asset, can they do so? The answer is no. The capital asset, if the company is doing some CSR work, in that some capital asset is generated. That capital asset should be in the name of BPRE 8, if you remember our code. Then after that, we had done the next area, that is in relation to, sir, if there is any surplus arising in relation to CSR, then what should we do with the surplus? Can the company take it as a business profit? The answer is no. So that is the next area. Now after that, we had, sir, the board report, and the foreign companies have to give an annual report on the CSR. That was the next part. Then after that, we did one more area. That is, sir, can the companies take outside assistance of any other universities, foreign universities for doing CSR work, or help of any foreign, what do you call, incorporated bodies? The answer is yes, no problem. Last we did, that's a CSR certification who should do. That is the CFO or any other person who is in charge of the financial management of the company. They should certify the CSR work or CSR amount. Then we did one more part in CSR, that is a net profit computation. Okay, that remember net profit computation, that is, sir, if it is an overseas branch or overseas subsidiary, that part of net profit we will never take. If there is an Indian investment which is there, and that company is paying us any kind of dividend, and if CSR applies to that company, then it will be deducted from our net profit, that much, the amount that we are receiving from that company. And third is in relation to, sir, if the company is there, which is there in India, but they don't have to comply with CSR requirements, and suppose our company holds shares in that company, and if they pay dividend, now because on that dividend is paid from profits on which CSR is not paid, so from our net profit we should not deduct this net profit, correct? So that is this amount, correct? So that is basically this area. That is your section number 135. Okay. Now we go to 136. Now 136 has basically 6 parts. So you have to remember this very, very carefully. 136 part number 1 is in relation to that M10. Correct. M10 will be given the financial statement 21 days before the AGM, and can they be given with lesser number of days remaining? The answer is yes. We need approval then. All that is part 1. Part 2 is in relation to company will place the financial statement on the website of the company. That is that India map, correct? Remember, Reliance Limited, Z Limited, G Limited, A Limited, and J Limited for the example which we did in the class, correct? That is Reliance, Z Limited, Indian subsidiary, Germany, Australia, and Japan. So that is how we did it. Then after that, we had the next area, that is in relation to, that is completes your 2 parts. Then after that, we did the third part. That is the finance statements have to be placed on, have to be given to the shareholders in electronic mode. So we have to give to the shareholders through email. So that is covered in one part. Then we did the fourth part. That is, if the shareholders want to inspect or want copies of the financial statements of the company or its subsidiaries, will it be available for them? The answer is yes. Okay. Fifth one we did was in relation to needy company. So needy company was the fifth one. And last one was the penalty. If the company doesn't do it, for the officer in default, the fine is I think 5,000, and for the company it is 25,000. That is covered in section number 136. Now we enter section number 137. Okay, 137 is information to the ROC. Now, information to ROC, in this case, you have to remember that when we are filing it with the ROC, we have to ensure that when is the AGM conducted, and if the AGM is conducted and it is approved, then we have to file within 30 days. If the AGM is not done, we have to still file provisionally with the ROC within 30 days. Then we only conduct urgent AGM, and if it is adopted or approved in that, then in that case we have to file it with the ROC within 30 days from the date of the urgent AGM. Then if no AGM is created, then from the date when the AGM should have been held, we have to file within how many days? 30 days. Comfortable? Then you had in relation to the foreign subsidiaries also we have to file. So in that case we saw, sir, if in case of A Limited, unaudited financial statements will be put. Remember Australia. In case of J Limited, Japan, translation in English will be put on the website. Finally, we did that last area, that is in relation to OPC. 180 days from the end of the financial year, we have to file the financial statements with the ROC. That was covering this part. Then this section number 137 contained the matter in relation to, sir, XBRL format is required for certain companies. So that was listed companies, their subsidiaries, all these things we did, correct? So you understand that that part is XBRL part. So this entire what we saw till that OPC part was part 1, and then this XBRL part becomes part 2. And then of course you have the third one, that is a penalty part. Penalty part in this is slightly different. Okay, I'm just telling you different. You have done in the class. In that you have the step ladder type of penalty. So managing director or CFO, if they are there, they will be penalized. If they are not there, then any other director charged by the board will be penalized. If he is also not there, then all the directors will be penalized. So it goes in this manner. That is a 137. Then we did 138. Now 138 is in relation to what? That is your internal auditor. Internal auditor, there are three parts only, very simple. First is internal auditor applicability. That is, you know very well, it is L, O pot, 25, 50, 100, 200. And you have to remember that in 100 point, that 100 part, which is it is plus 100, that is more than 100. So just remember that part. Others are 25 plus, 50 plus, more than 100, and 200 plus. Then last but not the least, we did sorry, in this company secretary part, sorry, internal auditor part. My bad. You had the next area, that is the internal auditor may or may not be an employee of the company. Internal auditor need not be only a CA; it can be a CA, cost accountant, or any other professional. That is what they have given. Okay. This chapter, fairly simple chapter. So you have to just be ensure that you are dividing it in parts. Very, very important. Only if you divide this chapter in parts, you'll get a grip on this chapter. Okay. Chalo. I wish you all the best. Study well. If you like such videos, please write in the comment section below. That is, it is helpful for you. Any other area that I can help you in, I'll definitely help you in it. Okay. I wish you all the best. Take care. See you.